Question, a buyer question of the week and a seller question of the week. Want to get that in?
Yeah. So one of the most common questions, and I think let me preface it this way. I think it's the most common question that buyers don't are embarrassed to ask, maybe, and they don't want to feel like they don't know this answer because it feels like they should know.
Quick, tell us the question.
But the question is, how much money, how much cash do I need to buy a home? How much money out of pocket is it going to take me to buy a home?
How much money do I need to save before I talk about
to
a realtor about buying a home?
The thing that's interesting, there's been a lot of surveys over the years that, ask people, and
how much do they think?
How much do they think?
Right.
And it's interesting how many people think that they need at least 20% down to buy a home. Now, there's a whole debate. It's like, okay, should you do 20% down, or should you save up 20%? And a lot of people think you should, but that's not what we're talking about here. That what we're talking about here is, what does it actually take out of pocket? So Tracy, for down payments, right? This is the amount of money you're putting in toward the home to get your loan. What are your options there?
So it could be anywhere from zero,
okay,
up to whatever you want, right?
Okay.
No upper limit, or you pay cash.
Right.
So a veteran who qualifies for a VA loan, they have zero out-of-pocket loans for veterans. There may still be a few closing costs, but there are some options. So maybe the closing costs could be up to $3,000 depending on the price of the home, but it could be zero out of pocket.
So for that zero down program, it's dependent that it's a veteran, right?
Somebody who's served and left in good standing and qualifies to use the VA loan.
And that's the best program out there. The other zero down program that's out there that's kind of not very well known is
the USDA loan.
Yes.
So this is for more rural areas to provide better financing options for people that are out of the metropolitan areas. So even some parts of Bernalillo, Placitas, Edgewood, East Mountains, South in Valencia County, Sandoval County, different areas do qualify for a USDA zero down program. So there still could be some closing costs. So we're talking about down payment is one portion of what it costs to buy a home.
Well, let's just finish up with the down payment conversation. So other than the zero down, we talked about USDA, VA, what other down payment tiers are there as we go through?
Sure. So then there's the New Mexico Mortgage Finance Authority that has a down payment assistance program that you have to qualify for to have an income limit. And the limits are very high. I'm surprised. So the Mortgage Finance Authority, we call it the MFA.
When you say high, what you're saying, though, is there's a limit. So if somebody makes $1 million a year, they're not going to qualify for a down payment assistance program, right?
Correct. However, if it's a two-person household, the income in Bernalillo County or Albuquerque, you can make up to, I think it's about $70,000 a year and qualify for a down payment assistance program to help you get into a home.
And those are great programs, $500 out of pocket.
Right. And in Santa Fe, the limit is much higher still, like $80,000. And if it's a three-person family, it's actually higher than that. So that's a down payment assistance program, which helps cover the closing costs and the down payment. You have to have at least $500 out of your own pocket to put into it. There's a couple different programs within the MFA, so it could be first home or next home.
Okay.
So if you have owned a home, there might still be a program for you. And first home is actually only haven't owned in 3 years, never been a homeowner. And then it goes to FHA.
Okay, so so let's go to the next. So what's next?
So then we're at FHA, which is 3.5% down payment. So let's talk about a $300,000 house, right?
Right. Let's talk about a $250,000 house because I just did the math.
Okay, so down payment 3.5%
is $8,750.
$8,750. So when somebody says, "How much down payment do I need to buy a $250,000 house?" most people would be FHA financing.
Well, okay, I'm going to contradict that because that's actually not the most popular loan program right now. FHA is not. Actually, conventional loans are more popular right now. But sorry.
Totally. So anyway, FHA, 3.5% down
and
payment.
FHA is a very popular, really good program, 3.5% down. So next, there's actually these conventional loan programs.
that might start at 3% down, 5%.
Exactly.
10%, 20%. So conventional.
And the thing with those is you don't have to know exactly what the best program for you is. You're gonna work with a mortgage lender, a mortgage broker, a mortgage officer, whatever you want to call it, that is, can look at your financial situation, look at how much money you're able to put down, and then gear the program and put you in the best loan program for your situation.
Right.
I think what the takeaway we want to get here is that people can get into a home for $10,000 or less in down payment when they're thinking about, okay, how much money do I need to save? The next part of this conversation, other than the down payment, is the actual closing costs. So other than the down payment, which is your skin in the game, if you will, on equity in the house.
That's your equity.
Yeah.
Right.
What other costs is a buyer going to have to get into a home?
Sure. So you've got the down payment, and then you've got some other costs.
Right.
In today's climate of being a home buyer, typically the home buyers are paying for their own inspections.
Yep.
So that might be a home inspection for, let's say, around $350, give or take, plus tax.
They're higher than that these days, aren't they?
No,
Yeah.
$350 is most of them. Some of them are as high as $500 or more.
Okay, got it. Okay, so it depends.
Plus tax.
Yeah, it varies. Okay.
Termite dry rot inspection, $80 to $90.
Mm-hmm.
And sometimes there's a sewer line. Sometimes you're looking at wells and septics and things like that. So those are things to look at. But we have a whole chart of what things typically cost and who typically pays for them when you're buying a house. And then there's things like your first year of homeowner's insurance that's paid up front at closing. So if you're buying a $250,000 house, typically, you're going to get a quote from a home insurance company, and maybe it's $800 to $1,200. They're gonna collect that up front for the first year.
So I just want to break this out here because I think it's an important distinction here. When you buy a home, let's say you're buying a home with cash, right? You're still going to have home inspections. You're still going to have a termite or dry rot or any other inspections you want to have. You're going to have those costs. You're going to obviously pay for your insurance. Usually it's a year in advance. But if you're getting a loan on the home, which we were just talking about, you're going to have some expenses that are very specific to the loan. And so what would those be?
The loan fees.
Yeah.
So to the lender, they're going to charge a fee for underwriting. They're going to charge an origination type fee, kind of a transaction fee.
Yep.
And there'll be a few other fees, like a small one to check your credit, and a couple of mortgage endorsements, because when you close on the home, they want to be on that loan as well as you for ownership.
Yep.
But, those are, the lender fees vary a lot. So it's really important. A lot of times people call a lender and they go, "What's your interest rate?" And they're trying to compare interest rates when choosing a lender. But what they don't think about is how much does the lender also charge.
That is a big buyer tip right there, is don't just look at interest rate. Look at the other expenses or other costs that a lender may be charging to do your loan.
So when you take both down payment and other fees to buy a house, you can figure that, the down payment is one portion. And like Tego just said, on a lot of properties, it could be less than $10,000. And then the closing costs could be a couple $1,000s, depending on the price of the home and the types of inspections and what insurance costs and what the lender charges. So
you missed one.
Yeah.
Can I call you out?
Yeah.
The appraisal.
Ah, yes. And the appraisal.
Yeah. So the appraisal, that is basically the valuation that has to be done by a third party for the bank, the lender that's loaning you the money to buy this home, to verify that the value of the home is what it is, and that they're making a safe loan on this property.
Right.
Basically, is what it comes down to. Yeah.
The appraiser is basically the eyes and ears of the lender, right?
Right.
Because the lender doesn't actually go look at the house, and they're lending a lot of money, so they rely on an appraiser to say, yeah, you're making a good loan.
Yeah, basically.
Yeah.
Yeah. One of the myths in our business is the appraisers determine what a home is worth. No, an appraiser just verifies what the home is worth based on what the buyer is willing to pay for it.
Right.
Yeah.
So there you go. So if you're wondering what kind of money you need to have saved to buy a home, there's the quick thumbnail, but it's always
that
best.
was quick.
Yeah.
I'd hate to hear the long version. No, I'm just
Yeah,
kidding.
it really was.
No, and and these are the conversations you need to have with your realtor especially if you're a first-time home buyer, and really delve into these, and don't be embarrassed to ask any of these questions, right? We don't know. If we don't do something very often, we just don't know. We do this every day.